Today, now going over to the business blunder of the day, you have Ford stock is downgraded by UBS to a neutral. Now, it's one of those fascinatingly interesting things actually, where there are some industries and some vernacular where they actually like to keep things simple instead of making it too bombastically complicated just to sound smart in my opinion. But nevertheless, in this case, it is quite simple. There's three major categories when it comes to how a stock is talked about and evaluated. Quite simply is buy, neutral, or sell. And that's basically their advice. If they say it's a buy, they think the stock is undervalued, good long-term investment, buy it now. Neutral, that means don't buy, don't sell. They don't recommend either. And sell, as it so implies, it means they're worried about that company. Sell it now before there's nothing left. Now, this specifically is coming from UBS, and this is actually an article from Yahoo Finance, which might age me quite a bit, but it used to be the best search engine on the planet with a majority market share. As crazy as that sounds, fascinating tale of business aptitude is not selling when they're at the top and they sold for basically pennies on the dollar in the end. But nevertheless, this is from Brandon Smith and Shauna Smith. Perhaps related, interestingly enough, maybe. And apologies. They know that Ford was downgraded from neutral to buy by UBS. Analysts say that the automaker is fairly valued with its limited upside, arguing that it may have more obstacles to overcome than rivals. True. Now they noted that they just had the Let's see here. Let's see. Actually, now they also know that the CEO Jim Farley had to adjust his plans over the last several months and exactly the build out that he initially anticipated, where Ford has been challenged over the last several weeks. So the year one chart you're looking at refers to as the shares off just around 10%. So a name to keep in your mind radar throughout the day. And out of curiosity, if you pull up the stock ticker for Ford in the past couple of weeks and years, they're not doing great. Of course, one of the savior things of Ford is they always pay dividends. So there's a whole community of people who buy stocks who will only buy a stock if they pay dividends, which does incentivize you to hold the stock and not sell it. Now, I mean, they're doing a lot more. They're doing infinitely better than General Motors. Granted, that bar is so far might as well be underground. It's GM stock over the past 10 years has increased less than 1% about, which is terrible in every metric. I suppose the only silver lining there is that they haven't gone out of business and gone bankrupt for the fourth time. Let's just say Billy Durant would be very sorely disappointed if he saw what his creation has become today. Nevertheless, when it comes to the Ford Motor Company, their 5-year stock is pretty darn good. It's increased 24.04%. Now, that being said, the past year, not so great. So past 12 months is down, so it's negative 9.77%. Again, right now it's trading for $10.99 per share. Granted, by the time I actually edit this video and actually, render it, it'll be changed because the stock market fluctuates ridiculously. But nevertheless, for reference point, apologies. Year to date, granted it's only been a couple weeks, they're down at 9.62%. Now, going back out a little bit, 6-month trend is negative 22.6%. Past month, negative 8.57%. Past 5 days, down about 7%. So they're not doing good. Their 52-week high is $15.42 per share. Their 52-week low is $9.63 per share. Current market cap of about 40, or right under 44. It's $43.99 billion. Looks like the dividend yield is 5.46%. So not too bad to say the least. But they've had a lot of issues. And some of the biggest ones are, they're not things you can fix overnight. They're actually kind of baked in the cake, so to say. They're kind of the foundation, or perhaps a better metaphor might be a crutch that they can't really get rid of anytime soon. Two of the biggest detriments to Ford is, well, they overinvest in EVs, which are not making a profit yet. And again, you see the market shift for consumers. The biggest growing category for consumers, what they actually want to buy is good old, well, not good old actually, because they don't last worth a damn, but nevertheless, it is hybrid technologies. And Ford invested a lot of money in the F-150 Lightning as well as the Ford Mustang E-Mach, which again, it should not be called a Mustang because it has nothing to do with the glorious V8 stick shift muscle car we all know and love. But nevertheless, those parts of this company have been losing money dramatically. We're talking billions in losses. And so they have the EVs. It's not doing great. They invested a lot of money in that. They're scaling back their EV investment at 40% when it comes to their battery capacity production in the United States. So they're already pulling back in that regard. They also have an issue of the dealerships, which, again, you do need someone to service these vehicles, but the dealerships have such exorbitant markups. You had some people, and perhaps they're inebriated by drinking Bud Light, There are consumers buying F-150 Lightnings for $100,000 over MSRP. Which again, wind back the clock a couple years, people would joke and call you a sucker if you paid MSRP, with the exception of like Lamborghinis or something where the car is actually limited to a number of units that's reasonable. Not when, if you see limited in most cars these days, if you see it on Toyota or something like that, it's just the only limiting factor is how many they could sell. It's not really limited edition. But nevertheless, an overwhelming majority of the time, the MSRP was seen as you're a chump if you paid that. So these people are paying MSRP plus $100,000 for an electric truck. Now, it's come back down a little bit in terms of the dealer markup, but it's still thousands of dollars, which makes consumers very upset when they see the competition like Rivian as well as Tesla, where they have direct sales models. You just go to the website, no haggling, you don't feel like you're getting screwed over, and there's not a line item that says plus $10,000, $20,000, $30,000. So that's a big issue as well. And consumers are dramatically shifting. I mean, look, truth be told, do you know anyone in your lifetime who's ever enjoyed going to the dealership? It's consistently ranked as one of the worst experiences people fear and they disdain. No one wants to do it. Now, the issue with Ford is they have these contracts where they can't just break it overnight. A lot of these companies are, that's a nice way of saying bullying, forcing dealerships out of business, where they're saying, hey, if you don't pay, like for General Motors, for the Buick dealerships, they're saying if you don't pay, $400,000 to upgrade your dealership to handle these EV vehicles, we're going to pull your franchise. This is now a not point of contention, it is now a requirement for you to maintain your dealership status. So they're starting to change with the requirements, but Ford had that issue. They also had the unions, which increased the cost of labor exponentially while providing an inferior product. We have Ford, you have $80,000, $90,000 trucks arriving with mismatched seats and headlights. So they're just putting in the wrong headlights, not even caring. Which, that's a cultural issue as well. And again, they're paying so much money for so little performance. I mean, that's another detriment to the Ford Motor Company. And it's one of those things where the Ford family still maintains control of the voting rights. So they're still very much in charge. And long term, they've been doing pretty good with the decisions they've been making. But you also have the reliability issues. I mean, half the business learners on this show are recalls for the Ford Motor Company vehicles. And they've also alienated a big part of the market by not making cars. So Ford, if you look at the portfolio, the only car they sell is the Mustang, which is a great vehicle. It's one of the last, well, I was about to say it's one of the last. It is the last muscle car left, as the Camaro is becoming a electric SUV, and the Challenger Charger is going to be an electric vehicle and maybe in a straight six engine, which again, that was known for being a Hemi and having a good old V8. But you could argue that the Mustang is the only thing that actually survived the Pony Wars. But the Focus, the Fusion, all the cars, all the things that were lower price points to get you into the brand are gone. Which, again, they did lose money on a majority of those vehicles that they sold. That's why they got out of the business. But it also is hard to build brand loyalty if the only vehicles you have are pretty expensive. That's why many of these car companies used to have lower price points to get you into the brand and start to build some type of brand loyalty. Ford no longer has that. I mean, if you just go to Ford.com, what's the cheapest vehicle? Again, you're not going to be able to buy it for that because the dealership will mark it up by 5, 10, 20 grand. But we just go to Ford. Let's go to the good old Ford website. Well, it also shows you the first sponsor result is from Ford. Makes sense. But it says Ford hybrid and electric cars. Let's be honest. People buy Ford for the trucks, which, again, that is their core competency, despite the recalls. It's the most successful truck by number of units sold in history. So it makes sense for them to focus on that. Now, if I go to the vehicles page, looks like the Mustang, I think, is I guess the Escape, whereas the youth, as we used to call it, pretending it was a fast car, the Escape starts at $29,495. That looks like it's the most economical vehicle. You have trucks and vans. I guess the issue with the Maverick, which again, Maverick and the Ranger, again, brilliant ideas from a business perspective, because again, people want cheap trucks, but the market doesn't offer it. They're starting at 23 and 32, but you can't get it for that. So like if you look at the comment section on all the automotive YouTube channels, all the people are saying you can't find these Mavericks, and when you do, they're charging them over by like 10, 20, 30 grand. So even the rare instances, and again, I'm looking at their other vehicles, their commercial, their trucks starting at 70,000, 80. Their electric vehicles starting at, it's like the cheapest, 37. So again, I mean, gone are the days when you can get a new vehicle for you used to be able to get them for like sub 20 grand, but nevertheless, it's also having to do with government hyperinflation that they caused. But I mean, Ford seems to have a lot of things in their way from growing the company. And again, I'm not sure how they're going to fix all these long-term solutions, all these issues. And let me see here. I mean, maybe I'm alone in this assessment. Now, thankfully, there are some fun little comments section on the good old Yahoo Finance, so we'll take a minute or two to check those out. One of the first comments comes from John, and he says, quote, "Wait till the funds and institutions start pulling money out. They are in it for the divvies, but who knows how long that will last. Every time I turn around lately, the analysts are reducing their target on Ford," unquote. Looks like no one has liked these, but nevertheless, we'll read them. Jordan says, quote, "Ford faces a extra headwind. While people are flocking to Camrys, CRVs, Civics, and 3s, Ford killed or ruined the vehicles that competed with those models. Every manufacturer that sacrificed to keep affordable and sensible ICE in their portfolio will be reaping big rewards for the next 5 years," unquote. Which, yes, I wholeheartedly agree. The most successful brands, they have those entry-level vehicles because they want you to win that long-term loyalty. I mean, one of the biggest jokes when I was in the automotive industry was the Chevy Cruze, which is a fiscal joke because the dealerships, if they didn't sell anything but the bare vehicle, they lost about $495. And the reps, I mean, we would get like a gift card from General Motors to help incentivize to push it. The only way they made any money at all was financing and accessories. And even then, it's not very profitable. Contrast that with a good old Chevy Silverado, you're talking $5,000, $8,000, $10,000 in gross margin. That's why so many of these companies focus on trucks and SUVs. The consumer, they're probably higher quality materials, they last longer, and the consumer perception is that there's more value, so they can charge more for it, and it is a more profitable thing to sell. And the joke at the dealership was, people come in, buy a Chevy Cruze, and you just pray that they'll come back and buy a Silverado or one of the SUVs later, which, because again, at that time, they'll make a lot of profit. And in theory, you build that brand loyalty over time. And GM decided to kill the Cruze after they had a couple rough years of sales, which, to GM's credit, it was a fun little vehicle. They had the Chevy Cruze Eco with a stick shift. That's a blast. Put a little cold air intake, made you smile every time you hit the pedal. But nevertheless, they did decide to kill that vehicle. Another comment comes from James, and he says, quote, "Every time I invested in Ford, I lost money, never again," unquote. Let's see. John says, quote, "At this point, Ford's history needs a ladder to reach a new low," unquote. Let's see. John says, "The strike is behind them, and they have the leading vehicle that sells in America, the F-150, unquote. Which, yes, that is their bread and butter. That is the most important vehicle, which is why you would think the unions would actually do a good job assembling it, not having the wrong headlights, the wrong chairs, wrong decals in some cases, which, again, there's a lot of issues with that. One would think they'd try to emulate Toyota when it comes to the Toyota way and the manufacturing and the culture. Because, again, those vehicles are bulletproof, and they don't really make mistakes. Not so much. They haven't learned, apparently. And, again, Ford has all these issues. Now, historically speaking, Ford is what many people would perceive as a safer bet when it comes to the big three. The big three used to be Chrysler, General Motors, and Ford. The big three American automobile companies all headquartered in good old Michigan. Well, many years back it was good. But nevertheless, they actually had well over a majority of the market share a couple decades ago. And it's been shrinking ever since. And GM's gone bankrupt, I think, 3 times now since Billy Durant founded the company when he combined Oldsmobile and Buick all those years ago. And with Chrysler, they went bankrupt so bad that they were bought out by a European company by the name of Fiat, and it was renamed last year to Stellantis, which is now a holding company of over 10 plus automotive brands all over the world. And with Ford, though, they're the one American company, including Tesla, I guess, so there's 2 American companies now, that have never gone bankrupt. And Ford came really close. They took out a loan at a very strategic time right before or during the 2008 recession, and their stock was hurting. It was around I think the lowest it got to $2 per share. It was rough, but they never went bankrupt. So Ford has that vote of confidence. They do have, I'm trying to find a silver lining, though it is overall obviously a business blunder, but they still have their good old government sales. Spoiler alert, if you ever see a Japanese car, it's not the police, unless they change the law, they're undercover. There are a lot of laws that stipulate you have to buy American-made products if you are a government entity, but nevertheless, they have good old fleet. Much apologies for that. They have those fleet deals. They have some upside to them, but again, all these analysts are downgrading the stock is terrible because so many investors, with individuals or institutionals, they rely on these types of ratings when they're evaluating what type of investments they're going to increase in terms of they have some more money, they're going to buy more stocks, as well as they're going to investigate and they're going to determine, well, what stocks do we sell this quarter? Do we hold on to it? Do we just sell it now? If they're more perhaps fiscally conservative, maybe they see this neutral as a sign that they should sell or be more aggressive in their exiting of an investment in Ford Motor Company. So it'll be interesting to see. Let me know in the comments, do you think Ford Would you, again, Ford, as we're recording this video, is bound right under $10, or sorry, $11 per share at $10.99. At that price point, would you buy a couple shares of Ford Motor Company? Again, this is definitely not financial advice. Truth be told, hindsight's always 2020 with financing or with investments. But would you buy Ford, or do you think it's time to sell it and invest in something else? I mean, having the stock drop so much and having it downgraded, needless to say, that is the business blunder of the day. Thank you, everyone, for taking the time to tune in today. Again, trying to get 4,000 subscribers by the end of January, so click that button. I really appreciate it. Also, leaving a comment and a like or even a down vote is a great way to give me some additional feedback and let me know how I can make the show better and better. Also, don't forget to take time to tell your family, tell your friends, tell your coworkers, heck, tell your enemies, tell anyone and everyone. Just stay safe, fight the good fight.